Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Lizzy Burden. We're an hour away from the opening trade. Here's what you need to know. The U.S. Senate takes a major step towards reopening the government after a group of moderate Democrats broke with their party leaders and voted to support a deal to end the record-breaking shutdown. And over in China, inflation unexpectedly increased in the month of October thanks to local holiday demand. Economists warning it may be fleeting due to a backdrop of deflationary pressures. And in the corporate space, Novo Nordisk walks away from Metsera after Pfizer agreed to buy the obesity drug startup for $10 billion. We're going to walk through the details and watch the shares at the European Open, Lizzy.
Day 41 of this US government shutdown, Kriti, and the hopes that it are going to end are powering US futures higher. Same on this side of the Atlantic, tracking the gains in the Asia session. It also means that we've had bonds lower and the yen lower too, as that safe haven demand pairs back. The countdown to the opening trade starts right now.
It looks like we're getting close to the shutdown ending. You'll know very soon. Thank you very much.
Maybe we get a deal this week, maybe we don't. So we're going to wait, we're going to watch, we're going to go through the details very, very carefully, because there are a lot of details still to get through to see whether or not actually this government shutdown does come to an end in the United States. This morning, futures are higher. Monday morning, that's how you want to start the week, isn't it? I wonder how much of this is shutdown. I wonder how much of this is Nvidia in the market this morning. But a little bit of positive news when it comes to the shutdown, but we've got a long way to go.
Basically, the Democrats are saying, okay, we get it. The flight situation is bad. The food stamps is bad. We know that things are getting worse. We're seeing a tangible effect now that we're into week 5, week 6 of the shutdown, basically. This is really crucial here because at the end of the day, this is now going to be something that is affecting people's minds, affecting people's voting behavior. This is also at a time when you have certain Democratic wins across the United States, in New Jersey and Virginia, and of course the New York City mayoral election. All that means ultimately they are willing to lower their demands a little bit. That's positive. The problem here is that what's on the table only lasts us till January 30th. So this is really kicking the can down the road.
When you say they, we're talking about eight senators, basically, that are broken away from the party. You've still got to get through the House. There's a long way to go here.
Yeah.
And we don't know whether or not we are ultimately going to end up with a deal by the end of the week. The House isn't probably going to vote until Wednesday, Thursday, even if we get that far.
And it could be that the market volatility lasts all the way until you've had all the I's dotted and the T's crossed. And as you say, Kriti, you've got to get through the House first. I wonder what pushed those 8 to this point more. Is it the wins? Is it the elections that have been happening? Or is it the fear that you're going to have all this airline chaos all the way to Thanksgiving?
Nobody likes being stuck in an airport, especially during the holidays. You're trying to get to your family. You want the pumpkin pie. That's basically all people care about at the moment. I think, and to your point, though, I think it is having a lasting effect on people's hearts and minds.
It's still unclear, though, if you listen to what is coming out of the House, that the House is going to back this.
Yeah. 100%. 100%. This is still 8 Democrats. What's crucial here is, to your point, this is the fear here. And I think the healthcare subsidies, which has been the key sticking point across the board, that's really where the pain point has come. From an economic and a markets perspective, if you had these healthcare subsidies extended, that would have actually maybe suppressed some of the fears around the inflation costs. If they are now going to be off the table, potentially, which was some people are questioning, that's inflation on the docket come 2026.
So basically, I've come to the end of this conversation, and I'm not entirely sure, A, why we've seen the shift, and B, whether or not it sticks. But the market is up this morning, and I wonder whether the market is up this morning because of this. I think probably a little bit, but also B, Jensen Huang coming out and making some very positive comments about TSMC demand and the fact that he sees huge demand for AI chips. So it's going to be interesting to see how technology trades at the get-go here in Europe this morning, and that may give us a clue to the answer on that question. Let's talk about China.
Yeah, I mean, I was going to say that's perhaps more of the reason why you're seeing such gains in the Asia session, but you also had the China data, CPI rising unexpectedly in October. Of course, the story has been entrenched deflation, and we've got a fantastic big take on the terminal where our analysis shows that actually the deflation on the ground feels more pronounced than the official data show. And they look at the official data, they talk about how it doesn't go into item level detail. The methodology is complex and opaque. So we have to ask whether this is just a holiday bounce and if it's going to fade.
A couple of things to say on that. One of which is Singles Day tomorrow, which is this huge global shopping event. It's going to be interesting to see what the takeaway from that is.
I'm glad you specified.
Yeah, because I was wondering, is this some sort of dating bonanza?
It kind of started off in some ways along that direction, but basically this is like Black Friday. except on a bigger scale globally. So that's how you've got to think about it. So I think you'll get a pretty good read on how the Chinese consumer is feeling. The second thing is, I would urge you to, this data is really important for a number of reasons for Western financial markets. Yeah. Okay, it is enormously important. And here's the reason why, and Simon Wright's been writing about this in Bloomberg Opinion. You have a situation at the moment where you have, and we just show the chart, Chinese money supply growing really, really quickly at the moment. So M1 money supply is growing dramatically. The Chinese are trying to force liquidity into the system, but they've got deflation. So what that produces is excess liquidity. Now, the Chinese, in theory, have a closed capital account, but they don't in reality, as a result of which what you get is money leaking out into global markets that then have an effect on those global markets by driving them higher. And this could be something that actually has a meaningful impact in terms of US credit markets. Yeah. So you can draw a line between Chinese deflation, Chinese M1 growth, and US credit markets and the supply of liquidity you need to support them, and how that could be a positive. So this data is super important, not for China, but for the United States. And if China gets out of deflation, that is bad news for America, because the liquidity will no longer be excess in China, it will no longer leak, and it will no longer support Chinese credit markets. Read Simon White. He is fantastic on this subject.
I mean, market plumbing in 30 seconds from Guy Johnson. That was fantastic. There's also European read-through here as well. How much of this, when you start to see some of the deflationary pressures already add to the overcapacity that is already a concern for the European market as well, does that just pull the thinking over at the ECB, for example, down even lower? There's plenty of news in the corporate space as well, guys.
Let's talk about Pfizer. Apparently Metsera and Novo Nordisk. Apparently Pfizer's won. Not entirely sure it has, but we'll come on to that in just a moment. Basically, what happened Friday was Pfizer matched Novo's bid for Metsera, and there was a call from the FTC to Metsera, which basically said, we will have a look at the Novo bid. As a result of which, basically, Mike decided finally, actually, he was going to withdraw from the bidding on this. Now, I say that Pfizer has won. So Pfizer initially went in to buy Metsera at 70, okay? It's now going to pay 86.25. So has it won? Well, it's had to pay an awful lot more in terms of getting this asset. The other thing that's happened as well is that the relationship with Metsera and its management will have been degraded significantly as a result of the fact that the Metsera management backed the Novo bid against Pfizer. So the management the kind of we're all friends here maybe goes out of the window. Now, Metsera's board, I think, has played this fantastically. It's basically got a significantly higher price for the asset and has done its shareholders a big turn as a result of that. But people are saying this morning that Pfizer has won. Yeah, it's won, but not quite as big as it initially started out as winning.
Did it win by itself, or did the FTC help out?
Well, the FTC,
yeah. From President Trump.
Yeah. So this is the other interesting thing as well. Is Trump controls the FTC, but on the other hand, Trump also called Mike Dustar a star in the White House last Thursday. So a star. He called him a star in the White House. Just punctuation matters there. And I don't know whether that effect would have been there, but the FTC call looks like it was reasonably crucial. But Pfizer has had to pay much more and now has a worse relationship with Metsera. Like, in some ways, you could argue that Novo Nordisk is the winner here.
We should mention that Novo Nordisk is already, we're indicated, about 3% higher in early trade gate pricing. So a little bit of a, when a deal doesn't go wrong, at least the stock price bounces back.
Yeah, well, you don't get the deal, and maybe there was the risk. This was the other factor, is they're not going to overpay. They didn't then raise again, so the risk of overpaying wasn't there. Let's talk about what we've got coming up on the show. There's some really interesting topics to kick around this morning. Fahad Kamal, CIO at Coutts, is going to be joining us. Jeremy Stretch, G10 FX strategy head at CIBC, is going to be joining us. Carolyn Robb, cross-asset strategist at Deutsche Bank, will be joining us around the open to talk about how the reporting season's been going. And Felix Kalin's going to be joining us, global head of emerging market research at SGCIB, SocGen CIB, joining us a little bit later.
Plenty of things to look at in terms of the week ahead as well. We were kind of debating this earlier. Is this a quiet week? Are we jinxing it? Well, on Tuesday, of course, the market is going to be closed in celebration of Veterans Day. The bond markets especially will be closed. That's going to be something to keep an eye on in terms of just kind of fund flow. Maybe that's why today maybe just feels a little bit quiet. We also get UK jobless claims on Tuesday, plus unemployment. The German CPI numbers coming out on Wednesday is going to be crucial. But I have a feeling that Scott Bessent is going to be making waves when it comes to his remarks at the U.S. Treasury Market Conference. Over the weekend, he was talking about a $2,000 dividend that Donald Trump had promised Americans. We're going to get into that in a little bit. He's kind of defending it. We'll talk a little bit about what that actually means for the U.S. economy, UK GDP, and Disney earnings on Thursday.
What a combo. I just want to take you to some breaking corporate news. We have Diageo naming as its new CEO Dave Lewis. Of course, used to lead Tesco here in the UK. Diageo, the big drinks firm, the maker of Guinness and Johnny Walker, of course. It just lowered its full-year outlook for sales and profit earlier in the week because of the weak demand in China and the US weighing on the company. But it'll be interesting to have Dave Lewis, given his experience. I think he was at Unilever previous to Tesco, so his experience brought to Diageo.
Deborah Crew was the previous, of course, CEO. She was dealing a lot with, you mentioned, to the tariff issues between the United States and China, but also the tariffs between the U.S. and Mexico, given that they have this massive spirits business globally, of course, one that does extend into Latin America.
Absolutely. OK, what else do we need to know?
Well, here are some of our top stories this morning. President Donald Trump has granted Hungary an exemption from sanctions on purchases of Russian oil, providing a major win for Prime Minister Viktor Orban. The Prime Minister told reporters that Hungary has won a general indefinite exemption on purchases of Russian oil and natural gas via two main pipelines. A White House official, however, described the exemption as being for 1 year. And here in the UK, the BBC's Director General Tim Davie is to resign amid allegations that the broadcaster misled viewers by editing President Donald Trump's remarks in a documentary. The clip made Trump appear to say that his supporters should, quote, walk down to the Capitol and fight like hell. In fact, he said they should, quote, cheer on our brave senators and congressmen and women. Well, the fight like hell remark was from a different part of the speech. News Chief Deborah Turnus has also quit over the controversy. And meanwhile, Super Typhoon Wong has made landfall over the northeastern part of the Philippines. It's forecast to cause widespread damage, power outages and flooding across the island of Luzon as it moves west. The typhoon has already left 2 dead and prompted the evacuation of more than 1 million people.
OK, what have we got coming up? Busy show. Tension between China and the Dutch government over Nexperia chip exports could send auto stocks higher at the open. Keep an eye on chip stocks generally. There's a number of factors which could support them this morning, particularly the comments from Nvidia. Plus, hundreds more flights cancelled in the United States as the FAA issues ground stops at multiple airports. We'll bring you the latest on that story. Up next, though, more detail on that US government shutdown as the Senate nears a deal to end the impasse. We'll have more on the wider implications for the markets. You want to join in the conversation? There's plenty to discuss. IB Plus, BV TV Go is the function on your Bloomberg. This is Bloomberg. Monday the 10th, good morning. 43 minutes to go until equity markets open for cash trading, but we have futures to look at. Let's take a look at what they're saying. And as you can see, it is a positive story. Look at that. We are certainly maybe taking our cues from what is happening stateside. We're also maybe taking our cues from the comment we had from Jason Wong relating to TSMC and the strong orders he is hoping for to be delivered. All of that coming together, I think chips are going to do relatively well today. We'll watch that sector, but it's a positive start in terms of this Monday morning. The US Senate is a factor behind this. It has taken a major step towards reopening the government in the United States. Several Democrats breaking with party leaders to side with the Republicans to pass a deal aimed at ending the shutdown. President Trump sounded an optimistic note on making this progress.
Looks like we're getting very close on the shutdown. We'll never agree to give any substantial money or any money to really prisoners, illegals that come into our country. And I think the Democrats understand that. And it looks like we're getting close to the shutdown ending. You'll know very soon. Thank you very much.
Jill Deesis joins us now to talk us through what we know, what we don't know. Jill, what progress has been made?
So at this point, Guy, what we've done is we've reached the success of a procedural sort of test vote in the Senate. So this kind of opens the door for the Senate to then reconvene in the morning, so Monday U.S. time, and actually put this to another vote. So this came through 60-40. What this would ultimately do is to fund some government agencies for the next year, but only a few, really Congress itself, plus the Department of Agriculture, the Department of Veterans Affairs, and then it would keep other government agencies funded through January 30th, in addition to providing some funding for furloughed workers, et cetera. So it does bring an end to the shutdown. In sort of response to this, the moderate Democrats that the Republicans were able to sway over to achieve this 60-40 vote that say that they were promised basically another vote on some Obamacare tax provisions that was ultimately at the heart of the shutdown. So that could come sometime in December if that's what was ultimately achieved here. So that's pretty much where we're at. But again, I think still a long way to go before this is actually, we'd consider the shutdown over. But it is a pretty significant step in ending what's been a 40-day shutdown.
Exactly, Jill. Are the markets getting a bit too optimistic here? What happens next? What about the House? Is this going to get past that?
That is a great question, and I think we've already heard from some House Democrats that are not particularly in favor of this plan. So look, I mean, at this point, certainly we've got all indications that this particular plan will pass the Senate. That is an open question in terms of, how this kind of, moves forward. And also remember, though, that even though it's passed this sort of procedural test vote, any sort of response from any senator, while they can't actually block the vote outright, could potentially delay it for another couple of days. So there's still not entirely certain that all of this is going to be wrapped up, incredibly instantly. I think the other point, too, when it comes to a lot of the Democrats is that while it has, achieved this pretty significant milestone in the Senate, again, this doesn't really include anything that really kind of lays down in concrete terms, what the Democrats were ultimately asking for here in terms of, some of those concerns over health care, those tax breaks, that kind of thing. I mean, you do have this pledge from the Republicans that there will be, a bill brought forth in December. But again, it really does fall short of some of those concessions that Democrats were ultimately seeking here. We've already heard from a couple overnight, that are kind of dissatisfied with the direction this is taking. So I'm sure there will be more to come in the morning. But again, so there's certainly, some signs that the shutdown could be ending, but a lot of hurdles that we have to overcome before we ultimately reach that point.
Our best case scenario, January 30th, and then we do this all over again. Bloomberg's Jill Desis, we thank you so much for walking us through the dynamics that we're seeing in the U.S. In the meantime, how do we interpret all of this for the markets? We've got the perfect guest for you. Fahad Kamal, Chief Investment Officer over at Coutts, joins us around the table. Good morning. Thank you for joining us. How are you interpreting the shutdown? Is this something that weighs on your investment thesis right now, or is this kind of something to think about later?
Oh, I mean, obviously, we'd rather it wasn't occurring than it is, but also historically, this is not unprecedented by any means. This happens reasonably often in the U.S. All the history would suggest just look through it and forget about it. Now, obviously, having said that, this one is the longest one ever, and particularly irksome to investors is that it's affecting the inflation data and the payroll data, etc., which is something that we rely on. But having said that, and especially from what we've just heard this morning, even here it seems that this will be ending soon, and it was best to have just looked through it.
Well, you're also, to your point, not seeing that much market reaction. Even credit default swaps on the states aren't moving that much, and they have in previous iterations of this, despite it being a record-breaking shutdown. So what's the bar there? If we go through all of this all over again in 2020, early 2026, which it's looking like we will, what's the bar to move the markets?
Look, I think the markets are really being held up right now by earnings and by what is still a pretty underlying robust economic picture, right? So if you look at the Atlanta Fed's Q3 real GDP, it's at 4% annualized. Ultimately, those are the things that are keeping the market buoyant, and it's the recession fears being relatively low right now, which are the most important thing.
Well, we've got limited US economic data, right? We didn't have payrolls on Friday. You're seeing job cuts at the likes of Target and Amazon. What's your read on the labour market at the moment? And are earnings good enough to carry the market when there are doubts about the labour market?
It's a great question, Lizzie, and honestly, depends on what you look at. I mean, there are some data points out there. Obviously, in the absence of the official data, there are some data points out there that look pretty good. So you had the ADP figures that showed a 40 or 50,000 increase in the labor market. You've got others that show that things actually aren't that good, whether it's the PMI services employment figures. So it depends. Now, I will just say this, that once again, everything that we can tell from earnings and from real GDP data that is being released by the Atlanta Fed, etc., is that things seem pretty good. And this is a strange, low hiring, low firing, but still buoyant economy.
You've got the likes of Austin Goolsbee saying, when it's foggy, you slow down. If the Fed doesn't cut next month, is it going to be behind the curve?
Tough to say. I mean, obviously, the inflation data is going to be the big, question out there. But then, and it seems that it is undeniably on a downtrend. Okay, I mean, how fast it gets there, what might be the impact of faster rates is all yet to be seen. But I think that the market is right to expect a rate cut to be coming, and even if it doesn't come in December, the path is undeniably downwards.
I can't work out if you're positive or not.
We are positive. We are positive, but I would say
positive enough to buy stocks, buy more here.
Buy more here. No, look, it's a really good question, right? We've been very lucky that we've been risk on unequivocally for 2 years. So in a way, for us, the question is when do we sort of decide to slow down, rather than if it would be much worse.
What is the answer to that question? Do you slow down now, or do you keep going?
No, we keep going right now because the earnings are very strong and the underlying macro is positive.
Are you confident enough that you can pick a top? Do you see a top coming?
Not.
Yeah. So do you see a top coming?
No, I don't. The reason being is that as best as we can tell right now, the risk of recession is low.
Yep.
Earnings growth in 26 is going to be 13%, and earnings growth in 27 is going to be 15%.
Yep.
Best that we can tell.
Yep.
With a recession probability which is about 15%, which is normal.
Right.
So those are the conditions that you stay in, and you expect that
US markets.
US markets, yes. And that you would expect the market to keep growing.
So why is the market so concentrated in tech stocks? If the US economy looks like it's in great shape, why are we just buying tech stocks at the moment?
Oh, we're not. Look, if you once again decompose the earnings, right? So you had amazing earnings from tech stocks, no question about it. But even ex-Mag 7, earnings growth was 10%. Right?
Yeah, earnings growth is, but stock like the performance of the tech stocks versus the rest of the market is extreme.
Look, there is a lot of momentum behind those tech stocks, and those tech stocks continue to wow and amaze, right? The results are good. There's a lot of momentum behind them, and there's a lot of fundamental quality behind them as well. So it makes sense for them to continue leading the market. That's not unusual.
When the market does take a breather, which it inevitably will, what goes up has to come down. How are you going to be able to tell if it's a pullback or a pop?
Oh, nobody can tell in real time. But by the way, if you look at the history of markets, what goes up does come down, but tends to go up more than it comes down over the long run. We should never forget that, okay? And trying to call, a top or a bottom or time anything is obviously a mug's game. What is the best strategy is always to focus on where you expect the underlying earnings to go and what the underlying macro scenario is telling you. Both of those continue to be positive, which would bias you towards risk. Now, of course, that doesn't come without potential downside, air pockets, tail risk, etc. But that's the premium that's the risk you have to pay to get the equity risk premium.
Very briefly, Farhad, this budget coming up in the UK, is it going to be gilt friendly?
I think that if the Chancellor is able to quite clearly set a good long-term strategic plan and the market buys it, it will be.
Okay. Farhad Kamal, Coop's CIO, great to have you as always around the desk this morning. I'm sure we'll be discussing that budget plenty more in the coming weeks. But coming up on the programme, the US Senate moves closer and closer to ending this US government shutdown. And we're going to discuss what it means for global FX and broader markets with CIBC's Jeremy Stretch. That conversation coming up next as we're looking at futures higher on both sides of the Atlantic, especially so here in Europe. We're up 1.6% on Euro Stoxx 50 futures, up 0.7% on S&P E-minis. This is Bloomberg.
Monday the 10th, hope you had a great weekend. We're, 30 minutes away now from the start of trading here in Europe for cash equities. The futures picture looks fairly positive. There's a number of things you want to fold into this, one of which is Nvidia. The other one is maybe the possible end of the US government shutdown. Whatever it is, we are risk on this Monday morning.
Yeah, we've got stocks up, but bonds down. Yields are higher across the curve on both sides of the Atlantic this morning as that demand for safe havens wears off on the hopes of an end to this government shutdown. And Valerie Titel has got a look at what else is happening in these markets in reaction. Val.
U.S. futures are pointed markedly higher, especially those NASDAQ futures up 1.3%. Perhaps this U.S. government shutdown, an end to it, could take our eye off the back of worries about an AI tech bubble or these AI valuations. But perhaps that's all we really needed to turn this equity market around. Remember, last week was the worst week for the NASDAQ 100 since early April, since those reliefs of Trump tariffs. Now, if we take a step back and think about how the equity market has behaved since the recent all-time highs on the 30th of October, at the extent of the drawdown on Friday, Kriti, we were down just shy of 5% drawdown from all-time highs. But the move on Friday and then the move again this morning is really erasing that in half. So just to put in perspective just how big the risk-on rally has been of late. Now, the market could quickly really turn its focus. Just how quickly could the BLS start to release the data that they have missed? Now, remember that September NFP, that was mostly already put together by the BLS just ahead of the government shutdown. It was supposed to be released on October 3rd. That was day 3 of the U.S. government shutdown. Perhaps we could get this to the markets by Friday. If we do get the House voting on the Senate shutdown on Wednesday, 48 hours does seem like enough in order for them to release it. The question just goes after that, does the market totally shrug it off as maybe backward looking and really wait to that December 5th NFP report? Or perhaps could be looking at 3 straight Fridays of non-farm payrolls releases? Kriti, it sounds like a party to me.
A party indeed. An optimistic one, I have to say. I feel like you're overestimating the speed of Congress there. Bloomberg's Valerie Teitel walking us through, I think, what is maybe the best case scenario. I don't know. We'll ask our next guest, Jeremy Stretch, head of G10 FX strategy over at CIBC. I was all ready to lay my bear case out to you, but now that Valerie started us off on this kind of party tone, in the best case scenario that she just laid out, where we do get 3 straight Fridays of non-farm payrolls, what do the markets look like?
Well, in reality, of course, that first payrolls print that was almost ready to be released at the start of the shutdown, that is so historical now. So in a sense, that's been almost, if not invalidated, but certainly will be diminished in terms of its response. And the subsequent payroll prints, if they were to come out on ongoing Fridays, the question is how much of the certainty will the market be able to give to that because of the subsequent revision. So I think we are going to see, and as we were just sort of questioning before we came on air, the debate of how long before we get a clean payroll sprint, and that may be 2026, and that's a real problem because, of course, we are focusing on that Fed decision in the middle of December, and it's going to be difficult to get absolute and clear data dynamics. So that does amplify, I think, the volatility, all the uncertainty that we're going to see in terms of both the dollar space, but also in terms of rate expectations as we go into that next FOMC meeting.
So dollar positive or dollar negative in the 2026 payrolls thesis?
Well, I think if we work on the assumption that, as we do, that the labour market is decelerating, there are signs of fragility. If we do see that playing out in terms of a weakened narrative, then I think that will amplify rate cut expectations and will send the dollar lower. So I think it's a case of a dollar lower story, I think, is the most likely one, unless there were to be a systemic market crisis that would create a panic-related issue, which then will create some degree of safe haven premium for the dollar. But I think that would be an extreme outcome or an extreme scenario.
Can I talk to you a little bit about something that may upset the bond market? I would never like to upset the bond market, but it looks like the Supreme Court may be edging towards the possibility of not allowing the Trump tariffs to go through, which would imply huge amounts of refunds and some turbulence in the US economy. The bond market probably wouldn't like that, because this, in theory, looks like a revenue-raising exercise, despite what the lawyers are saying. Just walk me through, what are the implications of Trump tariffs being thrown out for the dollar?
Well, absolutely. I think that is an uncertainty. If you looked or listened to the tone of the arguments that we had last week, it did appear that the Supreme Court were particularly, or not particularly sympathetic to the Trump argument. So in a sense, if you extend that, and obviously we don't quite know when the judgment will be coming, that is another layer of uncertainty. We don't have a certainty in terms of the timeline. But clearly, if there were to be a repudiation of the tariffs and there were to be some degree of discussion about the repayment of those. But
yields go higher in that kind of environment. So is that dollar positive?
I think we end up with yields going higher, but it isn't going to be one which is going to be beneficial for the dollar. I think it's going to be that sort of unusual story where we get yields going up and we don't see that providing a spread-based dynamic which is encouraging for the dollar. I think you end up with a risk-off narrative which I think will not be dollar positive if we are seeing that question mark regarding the Supreme Court and those revenue dynamics. Although one suspects that the Trump regime will be ready to provide alternative tariff dynamics, but it's that revenue-raising issue that is potentially going to be problematic, at least in the short term.
Jeremy, is it a good time to buy cable? 130 is looking a bit cheap now after that BOE decision.
Well, I think it's quite interesting. So we did see some discussion from various shops regarding the downside risk in terms of sterling going into the bank last week. I think we now have a relatively still modest degree of pricing for the December Bank of England. So I think there is still a greater degree of propensity for the bank to be acting not only in December, so we're only just over pricing in a little more than a 50% probability. But I think not only in December, but I think potentially we could get sequential cuts in February as well. So I think that's going to be problematic for sterling. I think the problem from a cable perspective is, and are those cross currents in relation to the dollar and the broader dynamics. So I think it's probably a more interesting trade via euro sterling. I think that's more interesting, and I would be certainly preferring to look at the euro sterling top side on the basis and the presumption that if the ECB is done, which we think, and the Bank of England are potentially going to be a little more activist than the market is pricing, that drives euro sterling higher into the end of the year.
And just speaking of the cross currents, I'm thinking ahead to the market reaction from the budget, right? It's coming after Thanksgiving. It's going to be low liquidity. Does that mean that actually Rachel Reeves is less exposed to cross currents, or that whatever happens, there could be more reaction and it'll be more extreme? Is it going to work for her?
I think it's possibly the latter. I think the risk is that it could be more extreme. So, you know, the budget taking place on the 26th, the day before Thanksgiving. So already US investors will be looking to lighten positions, looking away to the holiday period. So if we do get a surprise or a negative dynamic in terms of the market reaction to the budget, then the risk is that that's more likely to be amplified in a negative way. So I think Rachel Reeves has an Nvidia's balancing act to pursue to try and maintain market confidence and market stability. If she can get through it by providing some resilience in terms of the gilt space, then maybe sterling will not be sold off. But I think if there are going to be any uncertainties, then that could be amplified by the liquidity lull that will be heading into Thanksgiving.
That's the same issue across the English Channel as well. What does that do to euro sterling?
Well, euro sterling, as I say, I think does have topside potential. I think that's an interesting or the better way to look at sterling over the course of the next month or so. So if we are going to see budget-related woes or uncertainties, if we are going to see any fragility in terms of the forward-looking data, in terms of sentiment surveys for the UK, and that's going to be the interesting thing between now and the budget as to how consumer behaviour is impacted by the threat of tax hikes. And I think the ultimate story is probably going to be a higher euro sterling narrative. So this, you know, sort of anything sub 88 pence, I think is probably good value. Looking for a run up to the sort of 89, maybe 89 and three-quarter level.
There's a lot of kind of, on the one hand this, on the other hand that at the moment. Like, you could see this, you could see that. FX vols come down quite sharply. Is that the world we're now in again? That everything's kind of countering itself out and actually the FX market's going to be becalmed again and become... Again, it was boring for a long time. It's become exciting recently.
It has been boring for a long time. I mean, I think the phrase is cross-currents. There are a lot of cross-currents and
I should remember that. Yep.
Cross-impacts coming through. And in a sense, that does create uncertainties. In theory, it should see a little bit of an uptick in vol. But I guess the question is what's happening in terms of the interest rate space. That's also going to be the dynamics going to be mattering. So clearly, in many jurisdictions, we either are at the end or near the end of the road. But obviously, for a couple of jurisdictions like the UK and the US, we still have some distance to go in terms of monetary policy dynamics. And that, I think, still leaves us with some potential for some volatility spikes on the way.
Just coming back to the lack of data and therefore the look at the private data, which numbers are you looking at, Jeremy? Because there was so much hype about the Challenger numbers, but doubts around them. What for you is the most important right now? Well,
you're absolutely right. I mean, Challenger is very much third tier in most instances. So I think in the context that puts more focus on things like the ISMs. I think those are very relevant. I think of something that we would always be looking at anyway, but I think a process has been amplified. I think the other interesting point is in terms of the US, that the PMI surveys have been not given the degree of credit and credence that perhaps they have been done in other jurisdictions. So I think those sort of forward-looking surveys are clearly important. And then, of course, we're looking at some of those private sector employment data outside of Challenger. So the Revelio survey that we saw at the back end of last week again provides us with a little bit of an indication. So it is a case that until we get the resumption of formal data, we are left to scratch around in the weeds for the private sector data and try and piece together the pieces of data to give us a better outlook. And that, as I say, is an uncertain period, an uncertain scenario, which is hardly conducive to market decision making.
Are we just done with all the debt issues that are piling up on either sides of the Atlantic? I mean, I feel like if there's any concerns about the U.S. balance sheet, yes, there's a shutdown component to that, or even the European balance sheet, you're looking at Italy, France, etc., it would show up in the FX market. Why hasn't it?
Yeah, that's true. It is quite interesting that we have periodic episodes where there is, in our periods of uncertainty. So we saw that obviously during the French government crisis. We suddenly started talking about OAT bund spreads, and then all of a sudden we don't. So in a sense, I think there's this recognition that I think for most jurisdictions they are very, very similar in terms of their debt and deficit profiles. And so you do periodically look at those that are at the extremes of the scenario when there are episodes of uncertainty, so whether there are government crises or potential budgetary issues and inability to get budgets through. And when we're outside of those, we're back to saying, well, most jurisdictions have pretty bad and pretty poor balance sheets, but it's a case of you only actually look at the outliers when there's a period of uncertainty in terms of the funding.
But Jeremy, the French haven't gotten a budget through. They're all rolling on.
They haven't yet, but I guess the market is just assuming that there will be that sort of underlying support. And I guess the other issue in terms of the European Union is that presumption that obviously we're talking about one nation within the European Union. We're not talking about a systemic crisis of the Eurozone proportion in the way that we obviously did in terms of the Eurozone crises. So in a sense, I think the markets are sort of looking at it and saying, well, it's a manageable or a scenario which isn't going to be systemic at this particular critical, or it's not a critical juncture.
All right. Jeremy Stretch, head of G10 FX strategy at CIBC, joining us for a little bit of a tour around the world. We thank you so much. Coming up on the program, China has agreed to resume some shipments of its Nexperia chips. It's the story we broke on Friday, of course, now confirmed by the Dutch Prime Minister. It's the latest de-escalation between the Dutch and Chinese governments that could send auto stocks higher at the open. We're going to dive into that next. Stick with us. This is Bloomberg.
We're just under 15 minutes away from the opening trade. Happy Monday, and indeed it is happy. We're risk on in these markets as traders are excited about the potential end to this US government shutdown. Euro Stoxx 50 futures up 1.5% already, tracking the gains that we've already seen in the Asia session. Let's get more on these markets with Bloomberg's executive editor for Asia markets, Paul Dobson. Paul, are markets overreacting here to the possibility of an end to the shutdown?
So it doesn't seem like this is really such a great catalyst for the size of the moves that we're seeing. Asian market had a really good session. We had things like the Kospi rising 3%. Everywhere you look, it's very a risk on in a way that we don't always see. You've got all of the commodities pushing higher as well. As you were saying, Lizzie, equity futures are up too. I mean, the only thing that's changing really is, I suppose, having an operational US government and workers is better than not having one. And maybe you could go down a long extrapolated path and say we'll get some data and that will probably confirm that the Fed will need to be able to cut interest rates some more further down the line. But it does suddenly feel like someone's waved a magic wand over the weekend and all of the worries that we had that were hanging over the market last week have gone away. I'm not sure that sentiment is going to last all of that long into this week with all of the fragility and nerves that we saw, particularly in the tech sector last week. So, yeah, maybe an overreaction.
We just buying the dip, Paul? Like, is it as simple as that? Markets got beaten up last week, come in on Monday morning, catch a bid.
Feel refreshed and going for it. And I do, still believe that dip buying mentality is very strong, especially for the chip sector, and you can understand it. The market has rewarded that behavior all the way through this year so far. But on the other hand, how much momentum and mileage can you get out of this one? There's still uncertainties about whether the vote will finally get done as well. But probably it feels like there's at least enough momentum behind it to realise that, yeah.
Paul, we've had a series of guests on this morning. You say that history suggests we should look through government shutdowns from a market's perspective. What is the bar that gets these markets actually worried? How long does the shutdown have to last for the markets to actively trade on it?
Yeah, so I guess we did the MLive Pulse survey last week, and that found that it would need to continue to run for quite a lot longer before people genuinely got upset about it. On the other hand, there has been quite a lot of signs of weakness in the US economy coming through. I think that K-shaped recovery or growth narrative is really starting to make itself heard, because it seems like the lower earning ranks of society are really having a tough time of it at the moment. And you can see that if you look at, for example, bad loans on cars and those kinds of things. If you look at some of the consumer sentiment data that we had at the back end of last week, and even if you look at some of the market metrics as well, CCC spread starting to widen and show like a little bit more anxiety. Some of the company earnings we heard from the fast food retailers a couple of weeks ago, they were talking about people not spending as well. So I do think that there is a little bit of a worrisome kind of undercurrent there. Whether that comes to us anytime soon and actually causes the markets to have an upset, I don't think so, not when you've got the tech narrative and the buy the dip mentality, but it is something to keep in mind, particularly when we've had the shutdown as well that's added to that sort of picture. And so, keep on watching those developments through the rest of this week.
All right, Bloomberg Executive Editor for Asian Markets, Paul Dobson. Thank you so much.
So what's interesting, so if you go back, and Paul's kind of, he's a little bit of cold water being poured on this rally we're seeing this morning. ESA mini futures, last 6 days, we are still negative by 1%. So Monday, Tuesday, Wednesday, Thursday, Friday, factor in Monday on US futures, we are still down by circa 1%. So we're not filling the gap here. The dip has not been fully bought. Maybe this continues. Maybe you do see some more momentum coming through. But at the moment, you are still underwater on a 6-day basis.
A 6-day basis. That's got to be our new metric here.
It's a week plus one. 5 days. I guess kind of Monday morning.
Fair enough. It's a rotation. Last week was the first kind of full week of November anyway, so it was a new month and a new start to that. Maybe the corporate story will change some of that. We've got plenty of stocks to watch here this morning with Chloe Melly. Chloe.
Good morning, Kriti. Let's keep an eye on Novo Nordisk today, as the bidding war for Metsera has finally ended and Pfizer has won. So Novo Nordisk said over the weekend that it would not increase its bid any further for the obesity startup Metsera. And Metsera itself said that there would have been too many antitrust concerns with the deal with Novo. So we'll see how the market reacts to that this morning. The shares in Novo Nordisk have already been taking quite the beating over the last year. We are down 61% because of a series of profit warnings and big management changes that really spooked the market over the last year. So we'll see if now investors see this failed bid as either another setback or potentially Novo Nordisk walking away from something that would have been quite difficult to pull off anyways. Moving on to the car makers, also this morning that could be on the move today. That is after China confirmed that it would be resuming shipments of Nexperia chips to Europe. So that is quite good news for those companies across that car making sector in Europe, including Volkswagen, BMW and Mercedes. Those had all warned about the impact that chip shortage would have on production, and Volkswagen in particular has been quite vocal about that disruption. So we could see that potentially bringing an additional boost to those companies this morning, and now all eyes really turn to the Netherlands and whether it will lift government controls on Nexperia and potentially bring this crisis to an end. And finally, a Rightmove could also be in focus today. So we had a massive dip on Friday, quite a tough day on Friday for Rightmove. It had announced that the revenue growth for next year would be flat because of big AI investments, so we could see that major dip there. But then this morning we have a couple of new analyst ratings. So we've got an upgrade from RBC and Panmure Liberum, and then a downgrade from Barclays. So it seems that there is a bit of a confusion, a bit of lack of consensus around where the company is headed. We've got almost as many sells as we have got buys. So we'll see how the market actually reacts, whether it believes more in the downgrade or the upgrade, and we'll see if we get a reversal of that big drop that we saw last week.
All right, our equities reporter Chloe Melly walking us through some of the stocks to watch there. I'll add another couple of them as well. In the 6 o'clock hour UK time, we got some headlines coming out of Italy. This time, one talking about the finance minister. They're talking about the fact that the tariff effect isn't as strong as they expected, something that Italy can weather. Of course, they are keeping one eye on their debt story, so that's going to be interesting commentary to watch. But to me, it was the banking story because, Guy, you know I'm obsessed with the banking story across Europe. UniCredit is looking to appeal the court decision on Banco BPM. They're taking it all the way to the equivalent of the Supreme Court over in Italy. They're basically saying that these takeover conditions are simply too high.
Again, we are waiting for a court decision on a deal I feel like I'm watching this story time and time again at the moment. Europe just needs to figure out how to get its act together on getting deals done. They're so convoluted and so complicated now. Why would you attempt to get deals done at this point? It must be putting other CEOs off, watching what is happening here and thinking, do I want to do that? No.
It's interesting. This comes from a Republica report, and they're saying that the exit of UniCredit from its business in Russia is one of the main prescriptions that the bank that could focus on in the appeal. You know, that's such a story that we've seen for lots of other banks across Europe at the moment.
Banks have been a big driver, though, of the recent performance.
Buybacks.
Yeah, buybacks. How much more capital have they got really to distribute, though, I think is a question people are beginning to answer. But the momentum certainly coming out of the earnings season thus far has been positive. Chip stocks, I think, are going to be really interesting to watch, not only because of what is happening with Nexperia, that also will feed through into what is happening with the auto sector today, but also just look at what is happening maybe with these more positive comments that are coming through from Jensen Huang on Nvidia. That could have a positive halo effect coming through. But futures are the story this morning is futures are really positive. And we are bouncing back quite strongly after a really torrid week. So is it just that we've just had a torrid week and as a result of which stocks are bid? Are we trying as journalists maybe to pin a narrative on a story that is... yeah, precisely. You come in on Monday morning, why are stocks up? Well, it's because of the US shutdown or it's because of Nvidia. I don't know. It could just be as simple as we just had a really tough week. And maybe as a result of which there's fresh money to put to work on Monday morning, and there you go. It's kind of a mechanical process, pushes markets higher, and there's probably a lot of evidence within that as well. Anyway, futures are up. There you go. That's the story. Bonds are down.
Yeah.
Gold, some of the other kind of factors that we watch, a little bit more muted, I think, in terms of the response we are watching. Anyway, we'll go through all the stocks to watch in just a moment. We'll deal with what the real story is around these futures, and we'll figure out what the single stock story is going to be below them. I think that's going to be the interesting story of this Monday morning as we look ahead to a moderately busy week. This is Bloomberg. Monday the 10th, how are you doing? Hope you had a good weekend. Lots of sport to watch. Lots of exciting things were happening. Not sure markets feel that exciting this morning. And let me just talk you through the kind of my thinking around this. On the surface, they look exciting. At the moment, it looks like, and Kriti's going to show you this amazing sort of story in just a moment. European futures are ripping higher at the moment. But I think you want to look at this in context of last week. Let's take a step back to Friday. This is the session on Friday. That's where Europe went out. We rallied quite strongly on the back of this. So you've got to factor that into your thinking as well. Are we really rallying on the back of the fact we could get a shutdown ending? Maybe. Maybe there's a little bit of that in there. Maybe there's some Nvidia news in there, some chip news more broadly. But whether or not, and this is to Paul Dobson's point, do we have legs with this rally this Monday morning? If you're sitting down, you're a PM this morning, do you want to be buying into this? If you're a retail investor, do you want to be buying into this? How far does this have to go? I think it's the question that you want to be asking yourself this morning. But at the moment, the story this morning is just risk on. But look at the charts over the last 5 days, Kriti.
Absolutely. Green on the screen across the board. And you really see that in the futures picture here in Europe. DAX futures, for example, higher by 1.6%. The FTSE 100 on the back foot, but again, back foot by higher by almost 1%. This also feels like a little bit of a liquidity story to me as well. Remember, tomorrow the bond markets are closed, Lizzie. Maybe that's also people are taking their foot off the pedal.
Yeah, indeed. But let's take a look at some of the individual stocks that we should be keeping an eye on at the open, Kriti. First, we start with Novo. This after Pfizer agreed to buy the obesity drug startup Metsera, so beating Novo Nordisk. But did Pfizer overpay? Maybe Novo is going to be up this morning. We're asking who won here. We'll let the market decide. Also, of course, watching the autos, looking for a relief rally after China confirmed yesterday it's taken steps to exempt Nexperia chips intended for civilian use. And JTC, keep that one in view as well, Guy.
Absolutely. Right, here we go. Let's figure out exactly how strong this rally is going to be this Monday morning. I am expecting that we're going to see a lot of green on the screen. You're going to see the FTSE 100 popping as we come through. There you go. We're up by 0.4%. We're climbing. We're expected to be up much more than this. We're going to see other European markets opening strongly to the upside. That's the level that you need to think about. But actually below that, and in the context of what we saw last week, you need to think about kind of what is driving this. And I think, therefore, the stock story, the individual sector story, is going to be really interesting here to tell us actually what is the market signalling? What is the market telling us this Monday morning about what is going on here? So the Stock 600 is up by 0.8%. The FTSE 100 is up 0.7. The CAC 40 in Paris is up by 1.2%. The IBEX in Spain is up by 1%. These are decent numbers. This is a good, solid bounce back. But why, I think, is the question that I think we need to ask ourselves. It's maybe too simplistic to say this is just because maybe we're going to see the end of the shutdown? Is it more than that, or is it simply by the dip? There are lots of factors coming into the market this morning that we need to digest and try and separate out to get a better understanding of what is going on here. Lizzy, what do you got? Tell me about these single stocks. Tell me about these sectors.
So we've only got one sector in the red at the moment, and that's telecoms at the bottom of the basket. But the rest are in the green, and basic resources is actually leading the gains this morning, up 1.9%. Paul Dobson was talking about how commodities have been gaining off the back of the optimism that the US government shutdown is coming to a close. It's tech behind basic resources, and we were flagging that we should keep an eye on the likes of ASML because of those Nvidia comments, but also the Nexperia news. And then we had an eye on Novo, so they're up 3.2% at the moment off the Metsera news. So really kind of pleased with the way things worked out there with Pfizer buying Metsera. Actually, are they wondering if they traders wondering whether Pfizer overpaid here? But ASML, I should say, up 2.7% at the moment, Kriti.
Yeah.
Lots of relief here for the chip makers.
Unwinding the Novo trade, 100% classic M&A. There's a kind of a tale of two stories when we look at the healthcare space, because your biggest index contributor to the downside is Novartis. And I think that one's really interesting because you have AstraZeneca, you have Roche that are both higher this morning. They're also getting bids. That is unrelated to the Novo story, unrelated to the drug story as well. They're meeting endpoints, getting drug approvals. That's a different conversation. ASML is interesting, of course, but Prosus is actually your biggest and best Europe 50 performer, higher by almost 4% this morning. There's definitely a tech theme running through this.
Absolutely. There's also a China theme as well. You could argue that maybe the inflation, I know it's only 1 month and I know tomorrow, Singles Day, etc., but the luxury stocks are up this morning. Is that on the back of China? Maybe that's less to do with the government shutdown that we've been talking about this morning. Can I just go back to the Novo trade? Take a look at the Novo trade over the last few days, Monday, Tuesday, Wednesday, Thursday, Friday into Monday. So this is a 6-day chart again. I'm sorry, Kriti, to talk about 6-day charts. On a 6-day basis, whole of last week and this Monday morning, we are still negative by 5% on Novo Nordisk. So we're not filling that story in terms of what we're getting coming through this morning. But it is pharma stocks that are down the most this morning, which I think is interesting in terms of what we are seeing. Is that, and why is that? Is that related to what we're seeing over in the United States? Is it related to, I don't know what it's
But
related
they were up so much last week. Like last week, they were the outperformer.
So is that the reverse of the defensive trade?
Yeah.
So are we basically buying what we sold last week and ditching what we bought last week? Is it as simple as that this Monday morning? And all this kind of chat about shutdowns, maybe that's just the catalyst and the spark. But is it really that is what, is it maybe just a simple story? But we're buying the dip this morning.
Yeah. We should also mention, just because we talked about it in our stocks to watch, UniCredit is also one of your biggest index movers to the upside, higher by almost 2% this morning. They're appealing that decision. We were talking about the M&A unwind when it comes to Novo and Metsera. This is kind of interesting that they're appealing the decision and the shares are up. Maybe it tells you that maybe the narratives aren't actually driving this market. Everyone thinks just on autopilot this morning. Let's see if I'm right. Caroline Robb, Deutsche Bank's research cross-asset strategist, joins the program this morning for a little bit more analysis. Pleasure to have you this morning. Thank you so much for your time. Is that how we should be thinking about this with some of the markets closed around the world tomorrow? Is today just a rotation day? What do you think?
Yeah, I think after the past couple of days where we saw quite a negative sentiment today, that's a combination of multiple things driving the markets up. We've already seen more positive sentiment in the US on Friday on the back of the first positive news on the shutdown ending, where Europe was already closed. So we're seeing a bit of a catch-up effect in Europe this morning. We got some positive news on the chips front. So that should also help markets today. And I guess a bit of that is also dip buying after, past weeks were quite negative, while the macro environment actually remains quite encouraging. So the overall sentiment for equities is improving again.
Well, what is driving that? I mean, it feels like, and we're waiting for this kind of narrative, at least, that we're seeing so much of this fund flow go back into the States. When it comes to Europe, do we just follow the tone that the States is setting, especially when that tone is largely tech-driven? How are you thinking about that for this region specifically?
Yeah, so if we look at Europe, actually, the past couple of weeks, we had a lot of earnings coming in that were pretty strong. And I think investors are really looking for a broadening out of your US tech stocks. We're seeing a lot of concentration risk in US tech. So with quite positive earnings sentiment in Europe, I think it gets more and more attractive for investors to also move back into Europe. And we're seeing that sentiment really improving. And it's also backed by more positive macro data. We've seen PMIs improving. So I would say a lot of factors feed into that more positive environment for European equities.
Well, did European equity earnings change your outlook for what sectors you like, actually?
We didn't change our sector views based on earnings. Actually, I would say the earnings season confirmed our sector recommendations. So we're still quite positive on banks, and it was once again one of the sectors which delivered the strongest beats. Although we have to say that beats within banks declined a bit. So of the past 10 quarters, we saw massive beats in the bank sector, on average about 10% beats. In Q3, beats slowed a bit to 8%, which is still very strong. So we're seeing that the positive surprises from banks are becoming a bit weaker, but we're still on super positive levels. NIIs are holding up quite well. Earnings growth is holding up quite well. So that's one of the sectors that is still standing out positively. And financials overall have been one of the largest drivers of European earnings growth this quarter.
I'm looking at the autos names all bouncing back this morning, Caroline, partly to do with the Nexperia news. But do you think that the pessimism over the European car makers has peaked now?
Yeah, it's a very good question. So, of course, the positive Nexperia news is helping the sector this morning. If we look at earnings from autos, I mean, it has once again been the sector with the most guidance downgrades. We've seen basically all European OEMs downgrading guidance at the beginning of the earnings season. We still see negative earnings revisions for autos, actually. But there have been also some green shoots. So actually, for the first time in 5 quarters, autos have surprised to the upside during the earnings season. Of course, that has to do with expectations really weakening a lot. I mean, we've seen negative earnings revisions of about 60% for autos this year. So expectations are just very, very low. And now for the first time, we've seen autos earnings beating consensus estimates. So there may be a few bright spots on the horizon, but I wouldn't say it's yet time to buy autos. So we're still neutral on the sector.
Caroline, I'm really surprised coming out of this earnings season, and we're only just out of it, that I'm not seeing more upgrades for next year. Why are we not seeing more upgrades for European corporates for next year? Why are the analysts being as cautious as they are right now?
That's a really good question. I mean, we are also thinking that analysts are too cautious on next year. We've basically seen earnings revisions being slashed the entire year. And that's also a big difference to the US, right? Where in the US, earnings revisions have started to recover, and we are now back at pre-Liberation Day levels. While in Europe, earnings estimates have never really recovered from the decline they've seen after Liberation Day. And just now, just over the past couple of weeks, we're seeing a small uptick in earnings revisions. The earnings revisions for estimates for next year have increased by 1% over the past couple of weeks, which is it is a bit of a positive news. But of course, compared to how much earnings estimates came down over the past months, that's not really a lot yet. But we think that thanks to those strong beats we've seen in the Q3 earnings season, sentiment is really improving now. And we are expecting, and we're also hoping for, this trend of slowly recovering earnings expectations continuing. So we're seeing double-digit earnings growth next year. So that is still quite a bit higher than consensus.
What does that do in terms of getting European indexes higher? How much, if that comes to pass, what are we going to see in terms of the performance next year?
Actually, we're pretty positive on European equity markets into next year. It's a bit hard to compare that to consensus because we don't have that many brokers out with their year-end targets for next year yet. If we look at valuations in Europe, we are a bit above the long-term average, but we don't think that valuations are too stretched. And with double-digit earnings growth, we're actually seeing quite some potential for European equities up by double digits next year as well. So we really should see that recovery. And don't forget that we will also see the fiscal stimulus from Germany finally kicking in next year. We have seen the first first positive impulse already in Q4, but markets have got a bit impatient on that fiscal stimulus. But we, with the next year budget from Germany being approved probably end of this month, early next month, we should really see that stimulus kicking in, and that should also help earnings, and it should help a positive sentiment on Europe again.
Great stuff, Carolyn. Thank you very much indeed. Carolyn Raab, Deutsche Bank Research Cross-Asset Strategist. Thank you very much indeed. You're getting a rotation in the market. You're getting all the stuff that was beaten up last week coming back. You're getting all the defensives that did well last week. Giving back some ground. This is what the core six looks like. This is the kind of story that we are seeing across Europe. Take a look at the right-hand side of the screen. Look at what Nestlé's doing, down by 0.2%. The defensive names, the defence names are back. The chip names are definitely back. Luxury is bouncing as well. Novo's up. I think Novo is a bit idiosyncratic this morning in terms of what we are seeing there. Let's dig into the details. Chloe Melly is here with all of that.
Good morning, Guy. We have got some positive movement in ASML this morning, which is up 2.3%. That is due to positive read across from strong sales growth at TSMC. So ASML is one of the key suppliers to TSMC, and that could potentially boost the demand for that semiconductor equipment, those lithography machines that ASML makes. And so on the back of that, we are up 2.3% this morning. Moving on to Diageo, which is also up after naming a new CEO. So Dave Lewis, who was the CEO of Tesco and was also the chair of Alien, will start on January the 1st, and he has to kind of turn around the maker of Guinness after a lot of weakness in the last few quarters. Diageo lowered its outlook just last week because of weakness in China and the US, and so he has a big task ahead of him, but it seems that the market is quite confident in the fact that he can turn things around, and we are up almost 7% for Diageo this morning. Moving on, but staying in the UK, JTC, which is a provider of fund solutions and corporate services, is down this morning on the news that private equity firm Permira will be buying it for £2.3 billion. So we are down 4.6% on the back of that deal. Moving on to Siemens Energy, the company has been upgraded to a buy at Jefferies. We are up 4.6% on the back of that. The analyst said that the shares were significantly undervalued because the portfolio was addressing all the main challenges that we have got in the energy sector, including those massive grid investments. And so it is up on the back of that upgrade. And Commerzbank was also upgraded at Deutsche Bank this morning. The Deutsche Bank analyst said that the net interest income guidance looks quite conservative, and there could be more growth going forward. And so we are up 4% for Commerzbank on the back of that upgrade this morning.
Okay, Chloe Melly from our equities team, we thank you so much. And coming up, we're going to dive into some of those single stock stories. We'll check in on Novo Nordisk, the Danish pharma giant, of course, walking away from Metsera after Pfizer agreed to buy the obesity drug startup. That's coming up next. This is Bloomberg.
A little bit of churn in the markets, but equities are absolutely powering higher this morning. Look at it in the context of the last few days, and I think you probably get the story. What we are seeing is a reversal. You're getting all the stuff that was beaten up last week coming back. Now, we're not there yet, and we haven't completely filled the gap, but it looks like we are certainly having a decent effort at it this morning, and maybe getting halfway there. Let's talk about some of the single stocks that are on the move. Novo Nordisk is certainly one of those. That stock is up by circa 3% this morning. The Danish company bowing out of the tumultuous bidding war to acquire the obesity drug company Metsera, clearing the way for Pfizer's $10 billion deal. Now, Pfizer didn't start there. It has significantly had to raise its offer. Let's join now Bloomberg senior pharma reporter, Naomi Kresge. Naomi, let's talk about kind of how this all came to pass. Pfizer looks like it's come out on top, but has it? It's had to pay more. Its relationship with Metsera has changed. What does this mean in terms of A, Pfizer, and B, Metsera?
I mean, I think for Pfizer, Pfizer's CEO, Albert Bourla, this deal was a must-win deal. They had tried to get into obesity several times via their own pipeline, their own projects. It did not work out for them. And this was, you know, a way that they could make a deal to get into this huge market. Bourla needs additional revenue. And so for them, this was just something that they had to push through. On the other side, for Novo, I think, we're seeing the share rise this morning. I think that reflects some degree of relief that they did not continue to pursue this bidding war and bid even higher. I think, they've now bowed out at a level that they felt was the maximum, fair value for the asset. And they'll now look for other potential acquisition targets.
But will they? I mean, what is next for Novo in this space? Because obviously they've been trying to keep up with Eli Lilly. Does Mike Doustar keep pursuing more deals in this space?
Yeah, I mean, he sent out an email to his executive team over the weekend saying that he would continue to pursue deals in the space. They'll look for assets that are complementary to their portfolio, look for deals that could be around diseases that are associated with obesity, as we saw them do this fall, with the liver deal that they did earlier in the fall as well. So they will continue to look, and I think they'll continue to look at everything that's out there.
But is that, I mean, you lay out kind of widening the drug portfolio specifically, Naomi. When it comes to the obesity space, are there other candidates in the U.S. that Novo might have their eye on, or is Metsera kind of it?
We're hearing from some market observers that Metsera was certainly one of the best options out there. Now, are there other things, other assets, dealing with comorbidities that Novo could bid for potentially? I think we'll have to see how they approach this, and we'll have to see also how some elements of their internal pipeline shake out.
All right, lots to keep an eye on. Bloomberg's Naomi Cressio walking us through some of the dynamics behind Novo Nordisk's decision to walk away from their bid for Metsera. We thank you so much. Pfizer, of course, getting that for a whopping $10 billion. Sticking with some of the deals that may or may not happen, we're now watching one that is. JTC shares are moving quite a bit this morning, down about circa 5%. Interesting, given there is an actual M&A offer here. Why is JTC selling off? Permira has agreed to acquire the London-listed financial firm, outbidding rival Warburg Pincus. For more, we're joined now by Bloomberg Deals reporter Manuel Bagori. Manuel, can you just walk me through this share price reaction? When you have a deal like this, the target tends to move higher, not lower. Why is JTC selling off right now?
Interesting share reaction, Kriti. I couldn't agree more with you, but it's a good reminder that we never know what the reality is going to be when trading starts on a single security, despite the news of JTC being acquired by Permira. So the short answer is we don't know when and how stock will react. Obviously, there is different factors that come into effect, the premium one of them, the growth prospects, also the plans that the buyer has with the asset, and also investors sometimes could be pricing in the effect of a potential bidding war. We've seen in this case Permira prevailing, competition from other private equity firms. Perhaps there was also, the expectation that, who knows, maybe an industry player would come in and pay an even higher price. The expectation always, it's a little bit unpredictable, and how the market could react, it's a bit unknown when there is a deal announcement.
In terms of what's driving the story in London, here's another bid, here's another offer coming through for a UK asset. People are perceiving London as being cheap right now. Just give us the kind of sense of whether or not this process is going to continue, and if so, for how much longer?
Valuations are definitely attractive in some sectors. Some companies, as you will said, have seen the value of their stock compared to earnings falling dramatically to a level that it's more attractive for potential buyers. That obviously depends on the sector, depends on the company. But it is true that we've seen a number of examples in the UK that would suggest that there is a bit of a theme there. We are definitely watching it closely, especially particularly attractive for private equity firms that can make the numbers work and lever up these businesses, potentially paving the way for an exit down the road. But the reality is we've seen a number of such deals in other jurisdictions, across different continents. We've seen a number of those in the US. Here in Asia, corporate services is also an interesting industry. We've been actually tracking down other similar businesses in that space, which, by the way, has always been a very interesting field for transactions in the private equity industry. Take Vistra, Tricor, for instance, a climb here in Hong Kong as well recently. So it is one to watch, and definitely the UK has become a more appealing field for potential takeovers of publicly traded companies.
Yeah. Well, go on, Manuel, tell us. You're on the team that first revealed the takeover interest here. Who's next likely? Who might be the next takeover in London?
Oh, that is, the million-dollar question. I wish I could answer that, but us as reporters in the deals team, we are constantly, obviously, trying to, break the news first for our clients, for our readers and audience. So we'll continue to chase, and this field, corporate services, is definitely an attractive one that is worth keeping a close eye on, as in whether and when the next sizable target will come in is still, hard to tell, remains to be seen. But definitely, I would make the following statement, which is deal-making activity in the UK, in Europe, in the US, and here in Asia too, has been booming. We are seeing a radical increase in the volume of deals across sectors, across geographies. That's very encouraging, very exciting for investors, for deal makers, and with such backdrop, it's likely to expect more interesting deals like this one in the future for sure.
Well, great stuff. Thank you very much indeed, Manuel Baragori, on the latest M&A stories around the London market right now. Quick check on the chips, if I can get that out, to see what is happening this morning. As you can see, ASML up quite nicely, but just take a look at the context of last week. A little bit of dip buy maybe creeping into this market this morning, Lizzie.
Yeah, and I'm also watching Unicredit. You flagged this, Kriti. Republica reporting that they're going to appeal the court decision on Banco BPM, this court decree over the Italian government's conditions on the takeover. This is going to be in the Council of State, so it's the highest administrative court in Italy, and it's that July 12th ruling that they're going to be appealing.
I'll throw one more into the bucket to watch. Diageo having a really good day, a surprisingly good day for really just announcing who's going to be at the helm of the company. Here's how I get this, a whopping 7%. Dave Lewis, a former Tesco executive, is going to be taking the helm of Diageo. He's focusing on those core brands, maybe away from premiumization, and that's something that Diageo desperately needs, Lizzie.
Well, coming up, we're going to go to the micro. China's macro consumer prices surprising to the upside. We'll talk about what it means for the economy with Phoenix Carlin, Global Head of Emerging Markets Research at Société CIB.
This is the opening trade about 30 minutes into today's session. Green on the screen across the board. Your outperformer this morning, though, is the DAX, higher by 1.3%. We opened almost 2% higher, so starting to see some of the momentum come out of these markets, but still not too shabby for 8:30 on a Monday, Guy.
Okay, let's talk about the details of what we're seeing. In terms of the breakdown within the market, we are definitely front foot. 461 stocks up, only 132 down. All of last week, we were reasonably balanced. Volume's not there, though. Pay attention to that. So you're not seeing a pickup in volume on the back of this story that is taking us higher. So just bear that in mind. The other thing I want you to bear in mind is that basically what did well last week is not doing quite so well this week, and vice versa. So ASML, the chip stocks are definitely up. You're seeing the story coming out of China. You're seeing the story around what is happening with Nvidia, all boosting the story. So ASML is up by 2.4%. Siemens is also climbing higher as well. as is Roche. So some of the, you see some of the pharma stocks are doing better and some of them aren't. So Roche is up by 1.7%. Let's just flip this around and give you an idea of what is going on the other end of the story. So Novartis is down by 0.5%. So it's interesting we're getting a little bit of kind of differentiation within the pharma space. But look at the defensive names like Unilever, down by 0.8%. Defense did well last week. National Grid, take a look at Friday's session on National Grid. Had a huge day on Friday. We're reversing some of that this morning. We're down by 2%. So that's the kind of the story. A little bit of rotation within this market, Lizzie.
Yeah, here's what else you need to know this morning, Guy. The US Senate has taken a major step towards reopening the government after several Democrats broke with party leaders to side with Republicans to pass a deal aimed at ending the shutdown. The bill would provide full-year funding for some departments, fund other agencies through to January the 30th, and pay for furloughed government workers. But its passage in the House is not guaranteed due to opposition from Democratic leaders. Elsewhere, TSMC reported slowing growth in its revenue in October, potentially another indication that AI demand is moderating as this market turns frothy. Sales in October rose 16.9%, the slowest pace since February 2024. Still, though, TSMC shares have gained about 37% since the beginning of this year. And China's consumer prices unexpectedly increased in October as holidays during the month boosted travel, food and transport demand. However, economists see the price increase as likely fleeting, with deflationary pressures remaining entrenched. Guy, is it going to last? That's the question.
That is the key question that we are going to be talking about next. Felix Kalen, Global Head of Emerging Market Research at SocGen, joins us now. Good morning. What do you make of the data?
I think it's better than expected and certainly exceeded our forecast in terms of we're expecting for CPI year on year to improve 0.1. It was 0.2 instead, so mildly better than expectations. But I think in terms of the deflationary pressures that persist, that is still going to be a medium-term problem for China to tackle.
So how does it tackle it? Are we going to see more liquidity being pushed in? I keep going back to the kind of the M1, M2 charts that we're watching in China. They are going up pretty sharply at the moment. What have we got in the pipeline? What is still to come?
Well, what is still to come? We really want to see two things in terms of the two pillars. You have to support consumption, and that's via, one, stabilizing the housing sector. We're still seeing an acceleration in intensifying pressures in terms of housing prices going down. New sales going down as well. So there's still a contraction going on there. And your rental yields are not even meeting their borrowing costs, so there's not much incentive for people to actually buy houses. So there's a lot of pressures in the housing side, and we don't see much support coming out of there, especially from the fourth plenum a few weeks ago. And then on the other side is around supporting things like social safety net. So wanting to support that, and we have seen some announcements around that in terms of wanting to support pension payments and so on. But I think those policy measures need to be fleshed out fully, and we won't get those details for a few months.
I keep looking at the money supply data in China, and it is going up sharply. Where is that what is happening there in terms of that money? Because Simon White here at Bloomberg's writing about the fact that a lot of that liquidity is going to leak out of China and end up in other markets. Is that what's happening? What's the convergence looking like between M1 and M2 in terms of what it's telling us about future deflationary forces? Like, what is happening with the forces that have been unleashed thus far?
So I think in terms of M1 and the liquidity that's being unleashed, I think, yes, it's inevitable that some of that will leak out, because if you've got low real rates in China, negative carry, and growth prospects that are still quite muted, money is going to want to look for better investment opportunities outside of China. And so that's inevitable that that's going to leak out. But we are starting to see some convergence between the M1 and M2 dynamics, which I think is positive, and that's kind of a leading signal for credit growth in the future. So that's something that we might see try to feed through to kind of the underlying dynamics around corporate lending, and that might start to stabilize soon. So I think in terms of the picture that we have around deflation, the sequential moment might start to ease in the level of negativity, and then it should turn over the coming months.
Guys, they're talking about the leak out when it comes to kind of the market plumbing and, of course, how that shows up in the U.S. markets. When it comes to the European markets, though, would this compound the issues of overcapacity when it comes to some of the exports that are getting rerouted to Europe away from the United States? Are you seeing this as kind of a double-down effect?
Yeah, so we're seeing that there's huge amounts of export diversification outside of China, away from the U.S. and toward the EU in particular, and Brazil and South Korea. Those are the main destinations where exports from China have been basically dumped. And yes, we do have a problem with kind of the deflationary pressures that exerts on the EU. And so that is something that policymakers are contending with and will try to push back against the dumping pressures.
Is that just a China story? Are you seeing that for the other competitors in Asia, in Korea and Japan, et cetera?
To a lesser extent, the other players as well. But China has been kind of the main force of pressure, being in terms of the high amounts of tariffs that it's faced from the U.S. So that's where we're seeing the most amount of exports dumping.
So let's put China to one side. Let's say whether or not it's an anomalous print, this CPI number. We've seen this sharp slowdown in inflation across emerging markets compared to developed ones. If that means that central banks can be more supportive in emerging markets, how much more of a rally do you expect in EM bonds?
So I think one dynamic that we have to differentiate is, like, over the past year, we have seen that big divergence in inflation between EM and DM. But going forward into next year, I think that starts to fade away. So we won't see as much in terms of disinflation in EM. We're actually seeing some of those pressures come back online in terms of inflation's expectations going higher, especially in the CEE4 region and in LATAM. So that's becoming more concerning. Inflation expectations are getting much more de-anchored. I think that's going to pose a real problem for central banks to be able to ease much more into next year. We are expecting still a continuation of easing cycles, but at a much more moderate pace, a more modest pace. And so that means that growth can be supported less into next year. But at the same time, it does mean that because they won't be cutting rates so aggressively, the currencies will be supported to some extent.
And what about if the AI bubble bursts? Which EM currencies are going to be the most vulnerable in that situation?
It's going to be kind of the Asia bloc. The tech-sensitive EM are around Asia, so Korea, Taiwan, China as well. And those are the ones that have been getting hurt over the past week when we saw kind of the equity wobble in U.S. markets.
How significant could that be? The Korean equity market has been crazy over the last few weeks. Like, the performance has been absolutely massive. Now, we have seen some reversal within that. What's the relationship between, like, equity market flows and what we're going to see in terms of the currency, the AI trade back into the Korean won?
I think that's probably the biggest risk out there for the valuations at this point because of how much they've risen over the past year. Kind of huge, double-digit, almost triple-digit kind of gains. And so if the AI bubble does burst, which is not something that we have in our core scenario.
Might happen, though.
But yes, but that would have a huge impact on those equity markets where we have seen such huge valuation gains.
Is there an EM safe haven? If so, what is it?
So right now, for me, the safe havens are the places where currencies haven't appreciated as much as they should in kind of a real format. So places like Brazil, South Africa, Chile as well. So I think those are good places still, where it's relatively actually shielded from the tech bubble, and still there's currency gains to be had, there's carry to be had in substantial amounts. And I think that's probably the best plays over the next year.
It feels like you just named three really interesting countries. Brazil, though, I'm going to focus in on Brazil, although I have questions on Chile as well. For Brazil, is there a tariff risk for Brazil that needs to be factored into the currency picture?
So there's already kind of the tensions ongoing between Trump and Lula. But what we've seen over the past several weeks is they've had more conversations, in-person talks with each other, wanting to resolve some of those diplomatic type conflicts around Bolsonaro and so on. So I think there's probably going to be some progress toward those mediation efforts, and we're likely to see that materialize in actually some resolution around tariffs.
Despite the Chinese purchases of Brazilian soybeans and that kind of partnership that's growing?
Well, I mean, there are lots of issues to work through, of course, which is why this is not resolved yet. But I think we should see a trajectory of progress over the coming months, even if Lula stays in power.
Lots to digest. We got to bring you back on for another round of Latin American drama. Phoenix Kalin, Global Head of Emerging Markets Research over at SocGen Corporate Investment Banking, joining us around the table. Coming up on the program, we put our focus right back to what's going on in the States. U.S. airlines bracing for more turbulence as storms and a shutdown cripple flight schedules. We're going to bring you the latest coming out of the region next. Stick with us. This is Bloomberg.
Welcome back. We are 43 minutes into today's session, and you're looking at green across the screen. It's risk on this Monday morning. The stock 600 up more than 1%, and futures pointing much higher stateside too. S&P E-minis up 0.8%. Why? Well, there are signs that we may be getting towards a shutdown breakthrough. We had a little one over the weekend, and the US, though, continuing to experience flight chaos. More than 10,000 delays and cancellations on Sunday alone. We can come through some of these consequences now. Bloomberg's Lean Rashdan, joining us for more. Lean, just talk us through the scale of this disruption here. Is it that people are not going to get home for Thanksgiving?
Well, it seems that Sean Duffy thinks, the U.S. Secretary of Transportation, says that, if the shutdown continues, it's likely that travel during Thanksgiving will come to a virtual standstill. And we're still 2 weeks away from that. In the meantime, today, to give you a bit of context, yesterday, Sunday, had the biggest cancellations, the 11th biggest cancellations in flights for this year, 2025. And that's because, of course, the air traffic controllers are not getting paid, so they're not coming in, and that's likely to get even worse. And there's been decades of hiring shortfalls in these airports. Chicago, one of the biggest airports, is also seeing they're facing a snowstorm. So there's a lot of factors making these disruptions worse.
Lena, how long do we expect the cancellations to last? Do we have any insight on that?
Well, as long as the government shutdown continues, it's unlikely that air traffic controllers are going to start coming back if they're not getting paid. And as we go into the holiday season, they're more likely to just stay at home, and that's something Sean Duffy said as well. A4A, an airline trades group, estimates that the U.S. economy is losing between $300 to $600 million each day that we're having these disruptions, and airlines are going to, of course, there's going to be some impact on them because of having to rebook all these people, having to deal with all these delays. It's not clear, and it will all depend on the government shutdown.
Lean, say it ended today, how long would the effect be? Because I was also listening to Sean Duffy talking about the fact that ATC controllers are quitting, we're seeing a lot of retirees, that's picking up, that it's going to be harder to get back. How long could the effects of this be if we see even the shutdown ending this week? How long would it affect the airline sector for? Weeks, months? Give us an idea.
Well, this is a kind of unprecedented, situations. This is the longest shutdown, but it is also coming, off of COVID. We don't have that many air traffic controllers in the U.S. They're suffering from it. It's going to take some time for the airlines to be able to recover, and we're going into the busy season, so it's. These situations are kind of unprecedented, and we're just going to have to see how things work out. It's unlikely that the second that the shutdown, if they end the shutdown, that it's all going to get resolved. There's still people who have to be booked again. There's delayed flights, and there's a ripple effect on the aviation, sector in general in the U.S.
Very nice, Lean. Thank you very much indeed. Lean Al-Rashdan joining us from Dubai on what we are watching in terms of the U.S. aviation sector, part of our fantastic aviation team. Let's talk about what is happening actually in Washington right now. The U.S. Senate taking a step towards a reopening of the government. Several Democrats breaking with party leaders to side with the Republicans to pass a deal aimed at ending that shutdown. So we've got a procedural vote which happened yesterday, which means that basically we can get the main vote coming through. Now, President Trump says both parties are getting very close to ending the shutdown. Let's figure out just how close we are. Bloomberg's Jill Desis joins us now. Jill, what did we learn yesterday, and what does it tell us about how close we really are to an ending of this shutdown?
Well, Guy, there's certainly some obstacles that they have to overcome, but it does seem like they're at least on track to potentially end the shutdown. This procedural test vote that took place late last night in the U.S., so this was the Senate voting 60-40 on something, they'll ultimately revisit it Monday morning in Washington, but it does seem like the Republicans have garnered enough votes from moderate Democrats in the Senate to ultimately move something forward. After this, of course, it would have to go to the House, where Republicans already have majority control control. So maybe not as big of a hurdle there. But I do think the big thing that you have to watch out for with this upcoming vote that is potentially happening Monday morning is whether there's any kind of an action from even a single senator that could potentially delay things through some sort of a procedural vote. They couldn't necessarily stop the vote altogether, but there may be some sort of procedures in place where it could take another couple of days as they kind of drag this out. We'll see whether that actually happens. But again, it does seem like, all things considered, maybe they've actually sort of reached some kind of a breakthrough here where they could be on track to have the government reopen.
So how hard could it be, Jill, to get this bill through the House? What would be the obstacles there?
Well, I mean, at this point, you'd have to be looking for if there's any reason from any, I guess, House Republicans really to not pass something through. There's obviously different factions that you'd ultimately, want to take care of here. I think probably less so again on the Democrat side, just because it is those House Republicans that do have control of that chamber of Congress. But again, I think we're still kind of looking for any kind of an action, particularly as we await the Senate vote that could upend things, because at the end of the day here, remember the moderate Senate Democrats that ultimately came over to pass this procedural test vote last night. I mean, they didn't really get a whole lot in terms of major concessions. You've had a pledge from Republicans that there will be a vote on a bill sometime in December on some of the key issues that they're looking for, specifically that issue of extending those Obamacare premiums. That's some of those benefits that was really kind of at the heart of one of the major issues that Democrats were pursuing here that led to the government being shut down. So I think we're all going to have to wait for Washington to wake up and kind of see where things ultimately continue there. But again, it does seem like, without, knowing whether there's going to be any kind of an extra hitch there, that they are taking a pretty meaningful step toward bringing this government shutdown to an end.
Jill, you mentioned one of the concessions or potential concessions that Democrats had set out to actually achieve, these ACA or Obamacare extensions. It felt like economists, at least day 20 into 41 days of a shutdown, were saying that if we don't get these extensions, some of the healthcare costs would show up in the inflation data. Here we are, day 41 of the shutdown, talking about potentially not getting the extensions at all. Do we need to be more worried about inflation in 2026 that's stemming from the healthcare?
I mean, that does continue to be a concern, right? Because I think at the end of the day, too, it's not entirely clear whether or not that vote, one, goes forward or whether it passes. I mean, this was something that, was a sticking point for Democrats just throughout the duration of the shutdown as they were trying to bring up these negotiations. Getting a pledge for a vote doesn't necessarily mean that you actually see those premiums extended, right? So that does, I think, will continue to be a concern there. Whether that ultimately leads to continued negotiations or what a vote actually looks like or further discussions look like in December, I think remains to be seen. But yeah, it is something that I think kind of lingers in the background there as a major policy concern, as we head forward.
All right, Bloomberg's Jill Deese is walking us through the state of play over in Washington. We thank you so much. In the meantime, let's get a little bit of a check on what's going on in the week ahead, because there is actually plenty. It feels like kind of a slow start to the week, but there is plenty going on. On Tuesday, we have Veterans Day in the United States, Armistice Day here in Europe, but you are seeing the U.S. bond markets close. That's going to be significant, plus UK jobless claims on Tuesday as well. On Wednesday, German CPI, the Treasury Secretary Scott Bessent is going to be making some comments as well, plus votes in France and at the EU level as well when it comes to the budget. So maybe potentially some market action there on Wednesday on this side of the Atlantic. Thursday, it's all about the UK. UK GDP with a fun combo of Disney earnings. Guy.
Can't wait. Disney earnings. Always a highlight.
I'm tempted to ask you what your favorite Disney princess is, but I feel like you wouldn't have an answer.
Don't give him that out. Come on, Guy. What's your favorite Disney princess?
Yeah, Guy.
Can you name one?
This is what happens when you anchor with three girls.
Not going down this road. Plead ignorance. Yeah, it's Frozen, isn't it? That's the way we go. Is that Disney?
Elsa? Yeah. Oh my God, I'm so proud of you.
I'm really impressed.
This is excellent.
We'll leave you alone now.
Excellent. My job here is done. See, Valerie Titel's just sat down and been a little mean, so I'm wondering where we go with this. Okay.
Well, perhaps maybe to talk about what was not on the week ahead and what could potentially be, and that could be a non-farm payroll release. on Friday.
You're really excited
There's
about this, aren't
ifs.
you?
Yes, I am. Data.
This is like,
We get some data.
forget Disney. This is data. Data is Valerie's Disney.
I don't know how you've lived so long without payrolls. Your favorite day of
favorite Friday of the month, right? And we could get a resumption not just of that October release, but we could also get 2 at once from the BLS. If they are in a rush to get this data backlog done, especially given we have the Fed meeting on December 12th, they probably want to clear that backlog in a decent slate.
Are you going to believe the data?
Well, okay, this is the big question, right? We know that the first payroll release that we're missing, the one from October 3rd, was done before the shutdown, so it wouldn't have anything in there.
Ignore that.
And then possibly there could be some errors in the previous month's shutdown. So that could potentially be a reason why they would want to release more than one at one time, right? In a way to try to catch up the market so that on December 5th, when we do get the November release, maybe the market would believe that was a clean set of data. But it's not just NFP we're waiting for. We also have retail sales. That's a good indicator on consumption. GDP for the third quarter has also been a missing one as well. And then the weekly jobless claims. You know, we have been tracking those state level ones. But it'd be nice to see.
Are we going to get some volatility around all of this, though?
I hope so.
Yeah. That's why we love it.
Yeah, and also keep an eye on the private numbers as well at the moment. But loads of Fed speak this week too, because we're not sure if we're going to get a December cut.
No, I think that was the real key thing from last week. Yes, we did have the equity market disruption. A lot of that could be tied to the fact that the Fed was surprisingly hawkish, and perhaps if we don't get a clear picture on this data, if this data backlog isn't relieved before December 12th, the bar for them to be incrementally dovish, I think, really isn't there. They need more data in order to sound dovish. Now, remember, also the Fed is tracking CPI, but the November CPI is something we are now not unlikely to get. The BLS hasn't been collecting the data, and I highly doubt they'd want to just extrapolate from the online data that they've been able to scrape instead of those knocking on shop doors asking for prices, that kind of data. So we could get a lot of interpolations in the next few months CPI print, and that could be something, again, you know, the market could use to its advantage to argue which way it wants.
Yeah, always does. So my question is also, if the tariffs get tossed out, like, what does the Fed do with that? Is it inflationary? Is it disinflationary? Is it like, it just adds to the confusion?
Especially when they're now ramping off or taking their foot off the pedal of the QT story.
Yeah, well, I think the Supreme Court decision really isn't black and white. It's not just a yes and no when it comes to this. It's how are the repayments going to be handled. It's whether they chuck some of these decisions back down to the International Court of Trade. Yeah. There's a lot of unknowns that could come out of this, but we have seen estimates from some researchers. Evercore ISI was out saying that nearly 80% of the tariff revenue could be covered by other means outside of IEEPA. Now,
but there's going to be some churn within that.
That does vary differently across the street. So I think this is something to keep an eye on. It's just, if we do get a disruption to the tariff, just how much percentage-wise could the Trump administration still collect?
Bloomberg's Valerie Teitel bringing us a little bit of optimism and a little bit of gloom.
You haven't answered who your favourite princesses are, by the way. I'm just going to point that one out.
We'll hit that in the next show. In the meantime, don't miss an exclusive conversation. St. Louis Fed President Alberto Mussolem, 2:30 p.m. London time. That does it for the opening trade. The Pulse is up next. This is Bloomberg.